This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Victoria Fernandez joins us right now. Victoria, Paul's got some serious market questions in this melt-up and participating. I just want to ask one question to Victoria Fernandez. Are the Kansas City Chiefs the new Dallas Cowboys? Discuss.
Oh, that's tough. You're just, the poor Cowboys. I couldn't believe that game that we saw. I don't know. It's going to be tough for anyone to beat Baltimore. So nice. I think we'll have to wait and see what happens this weekend. But we got some good games to watch.
Victoria and Taylor
says so. Tom, and by the way, I grew up watching wrestling. My mother used to go to the Houston Coliseum with Paul Bosch and watch wrestling when I was a kid. So
there you go. It's everywhere.
That helped her on the CFA exam, Paul says.
Exactly. Hey, Victoria, I would love to get your perspective on what did we see in the last 2 months of 2023 when we had that huge move higher in stocks and bonds. And how does that set us up for 2024 here? How do you think about this year?
Yeah, coming off those October lows that we saw last year, there was just a tremendous amount of momentum, most of that led by the fact that the market took a Fed pivot full force and just priced in those 6 rate cuts starting in March. A soft landing was almost a 100% probability from the view of the market. And, look, we all spoke during that time period, and we said, hey, wait a minute, the market is way ahead of itself, right? It's ahead of its skis here. We've got to have some of this price back out of the market. So we expect to see a pullback. Yeah. We saw some of that in the first couple weeks of this year, but we're starting to see new highs again, but it's all led by those tech stocks, that Magnificent Seven. And in our opinion, that's not sustainable for the whole year.
I want to get back to brass tacks. Victoria Fernandez, Bob Dole, brass tacks. Victoria, I type in a mutual fund for my Ute, which is basically a trust-like fund, like what Rebecca Patterson would have known at Bessemer years ago. As conservative, Victoria, as you get for people scared stiff. 5-year, 84th percentile. 3-year, 90th percentile. 1 year, 90th percentile. 5 years delivered 12.4% net clean after fees. That's what the market timers are missing. How do they catch up?
Yeah, I'm not sure they're going to want to play catch up at this point. What they want to do is position themselves for the rest of this year and not worry about the part that they missed. But you can't do that by just going all in one area. So there's so much cash flow going into some of these Magnificent Seven stocks again, like we saw last year. That has to stop, and we have to have a broadening out. So you look at those returns that you're just mentioning. I guarantee those are not concentrated. They're diversified. You've probably got a little bit of global exposure, which I think you can do, especially if the Fed is going to be the first central bank to start cutting rates. You can dip your toe internationally. I like my fixed income, so I want people to have some fixed income exposure, even if they keep it very short on the conservative side and give themselves 5% cash flow coming through. And I think you need to use some alternative options in regards to call options, in regards to long short portfolios. These are things that are going to help you position yourselves for the volatility that we expect coming over the next couple of quarters, especially as earnings are not coming in as strong as many people expected.
Paul, this fund, Broadcom, Microsoft, Cash, United Healthcare are the top 4. This is a conservative grandma widow's fund. Paul, it is 11.7% in semiconductors. That's unbelievable.
That's a nice place to be. Victoria, I know you cut your teeth in the fixed income space at Fayez Seraphim, one of my favorite clients from back in the day in Houston. Where do I go in fixed income? Do I just sit in a 2-year treasury at 4.3%, or do I try to take some credit risk here? Because, again, I'm banking on a soft landing. So do I go out there and take some credit risk?
So, Paul, it really depends on what you're trying to do with your fixed income allocation. If that's what you're using to generate cash flow, then yes, do a barbell strategy and put some in that short term. The 2 years actually a little bit overbought right now. So I would go even a little shorter, 12 months, 18 months, skip that 2-year period, and then go a little bit longer, 5-year, 7-year, lock in some of those rates that we're seeing, especially now with the 10-year back around a 410 level. We think that's probably going to be towards the higher end of the trading range that we'll see for a while. Lock in some of those cash flows there. But look, credit is tight. We are not seeing spread widening like many people anticipated that we would see. And I think it's because the market anticipates that soft landing. But the way earnings are going right now, we have the blended net profit margin, the lowest in 3 years. The quarter over quarter decline is the largest we've seen since the first quarter of 2020. So I would be looking for some opportunities of spreads to widen out a little bit. Then you can jump in and put some high quality bonds in there, some investment grade credit, and I think you're in a good spot.
So on the equity side, Victoria, again, I mean, Tom's been in that Magnificent Seven all along, so he's just kind of singing to the choir here. But how about the rest of us? What do we do here? Do we chase those names, or do we try to find some value?
Yeah, don't chase. Hopefully you've been in these names all along, right? Even though we've been more conservative and we feel like the soft landing is not a done deal at this point, we've still been fully invested in the market. Microsoft, however, is our only name out of the Magnificent Seven that we've actually been overweight versus the index.
What's the pixie dust there? Come on. Bob Dole, I can't believe because he Bob Dole, overweight Microsoft. Come on, Victoria. What's the magic about Microsoft?
Well, look, Microsoft is one of those names, and when we talk to our clients, we say we want quality of earnings, strength of balance sheet, strong cash flows. Microsoft provides us that. We don't think you're going to see as much volatility in Microsoft as you're going to see in some of the other names that have shot up so significantly and then pulled back, and now they're back up again. Microsoft, out of all of them, has probably been the most steady and just moving slowly up and to the right. So we think it's a good longer-term holding in your portfolio.
20 seconds. That's all the time I got, thank God. Lions or 49ers, Victoria, please?
Hey, I'm going for the 49ers. Let's go, boys.
Oh, my God. It's just too much. I get rich once a year, Victoria Fernandez.
O-line. You can't beat that O-line and Trent Williams. Come on.
There we go. Victoria Fernandez. This is real football talk. She's dyed in Old Texas.
She knows what's going on.
It's like... This is an esteemed guest. He's been a huge supporter of Bloomberg Surveillance. Brian Wieser's with Madison Wall, where he writes, and consults to the advertising industry. Think Mad Men, think Madison Avenue of long ago and far away. Brian knows I am a confirmed reader of Lucas Shaw at Bloomberg. I can't say enough about the value of Lucas Shaw's newsletter at Bloomberg. I'll put it out on LinkedIn. And also I read Digiday, which is like the Brian Wieser report. Yeah. And Paul, the industry that you follow, that Brian Wieser's part of, it's insane. It's like Angry Beavers from years ago. Exactly. That's nuts.
It is absolutely crazy. And thankfully for us, Brian Wieser's on top of it. Brian Wieser, he's a principal at Madison and Wall. Hey, Brian, thanks so much for joining us here. You know, we got a report from Netflix last night, and boy, they're doing it right. What are they doing right that perhaps the traditional media companies just aren't getting it right now?
Well, first of all, thanks for having me as always. But as to what they're doing right, I think they're investing in their business. What a crazy idea that you can grow when you invest. But yeah, that's different than a lot of the media industry right now, where they're really talking more in terms of austerity, and what a shocker, they're not really growing as much. I think they've been focused on a global opportunity, and the fact that there is more growth from globalization, also shocking statement, and yet it seems to work.
Ryan, my reading of this, and of course this has everything to do, folks, with our new distribution of Apple CarPlay, and we're absolutely thrilled with the YouTube live response. Look for that Bloomberg podcast. I'll do all that on LinkedIn and Twitter and that. But Brian, to me, it's almost monopsonistic in that there's going to be a few standing. Let me pick on two. Are Netflix and YouTube the few standing in 5 years?
No, I think it's much broader than that. I mean, to be clear, when it comes to the video industry, the three players you could point to who are with fair certainty doing it right are Netflix, Amazon, and Apple. They're all investing billions of dollars against content. They're focused on global opportunities. Um, they're basically positioning themselves where they can apply scale economics. So they're all in pretty good shape. Disney, notwithstanding some setbacks, is relatively better off than others. At least they are more focused on the global opportunity than others. They're just kind of Disney's a little strategically adrift right now. I assume they'll get their footing once, either Iger has his team in place, because I don't think he does necessarily, or whenever there's a successor. But they really do seem to have the right bones, for lack of a better word. I think it's the others who are in a really, really bad place. Comcast, I should add, also because they're not going anywhere with NBCU. They'll be fine probably, but I think that they also haven't invested as much against the global opportunity outside of Sky, really covering just a handful of markets for the most part. Anyways, I think that because you need to invest in content, you need to invest globally, and you need to actually believe in your business. Those are kind of the three elements, and it's not just Netflix.
So, Brian, I mean, there's a whole host of, kind of what I'll call traditional media companies, legacy media companies. I just don't know what to do. I mean, I've been in this business as long as you have. If I were an investor, I couldn't put any money to work in that space. I don't know what to do with the traditional media companies. How do you think they adapt? Is this going to be a consolidation wave? What do you think is going to happen to, all these legacy media companies?
Well, exactly, and I think that everyone's expecting that. There definitely just needs to be, again, more strategic clarity. That would be helpful, and a belief that it is about more than just consolidation. Because right now, certainly when it comes to Paramount, when it comes to Warner, that's certainly where the focus is, and I think the expectation is NBCU and outside of Comcast is involved. But in terms of like where the opportunity is, you have to find your spots in the right value the right day.
Brian, a major value investor with huge R-squared success in the industry emails in, worships everything you talk about. You've just described content, and that describes a train wreck known as Warner Brothers Discovery. We've all got our biases here. I read Variety like everybody else. But what I see on a weighted average cost of capital, all of the recent radio bankruptcy that we saw, is a ton of debt at WBD. I got them listed out as 62.9% debt. Can Warner Brothers make the divide to successful, the reach, go over the canyon to the nirvana of successful content?
Again, I think their focus, unfortunately, has been away from the things that one would need to invest in to drive growth at the present time.
Why can't they do that? This is critical. Why can't they do what Netflix does, what Apple TV's, what is it, Constellation's coming out? I got scared at the trailer.
Yeah, exactly.
But Brian, why can't they do what the others are doing?
They could. I mean, I think anyone could. I think it's just a matter, again, strategic clarity is the thing, right? Go back to Disney 2018, right, when they announced Disney Plus. Go back to everything that Bob Iger was talking about then. He was absolutely spot on in terms of what they needed to do. Unfortunately, Wall Street and possibly even Disney did not understand that the economics of this were not going to be favorable. But making a bad decision was better than making a worse one. They made the bad decision. And it was the right one, given where the industry was going. So sometimes I think the companies just need to get comfortable with the idea of it's going to be not as good as you'd like it to be. You can't go back to where it was, but you can make the most of the world the way it will be. And I think that's the sort of conviction that certainly investors who make multi-billion-dollar bets when they're able to usually have a lot of conviction. You do want to see that from the companies putting their capital to work.
Hey, Brian, with all your experience in the advertising space, particularly at Group M, with the biggest TV advertising buyer in the world, talk to us about the TV advertising business. I mean, outside of some NFL games, is there any reason to think that television advertising business, broadcast and cable, can ever grow again? Because that's critical for these media companies.
Nope. I mean, and this is the thing, at least in the United States, television outside of the bumps you see from political advertising and from
Right.
Olympics, which hits individual companies on a quarterly,
Right.
short-term basis, the long-term trend's permanent decline. There's no way around
Right.
it, and that's actually why the biggest opportunities are for Meta and
Right.
Alphabet and Amazon and lots of other
Right.
players. But television, no, permanent decline.
Brian, 30 seconds here. This week, without question, Sports Illustrated at the kiosk
Yep.
down at the corner of Lexington and 58th would have a cover of the Detroit Lions winning large. It's over. It's gone. Our SI and magazines in honor of Frank DeFord, is it dead?
Yeah, I think magazines in their print form. Again, it's funny, the disinvestment of print, the disinvestment of content, the focus in the case of SI and the Arena Group, unfortunately, of an original human content is the problem. And yeah, it's just permanent decline.
Brian Wieser, Madison will hugely advantage. Can't say enough about his industry comments. We're going to get right to it. This conversation is so important. Joining us from RBC Capital Markets, just really, really exceptional on the acuity of the market and looking over what are called the Greek letters and the cross moments, that statistical talk, is Amy Wu Silverman. Amy, what's changed in the Greeks with this melt up, particularly in Magnificent Seven? Like, what is skew done for global Wall Street?
Good morning, Tom. It's funny because the market is really back to its old ways. The kind of things that worked last year are starting to work again, but the option sentiment is actually quite different. So, even though we have this Mag 7 mega cap tech rally again, seems familiar, the option sentiment is just not nearly as bulled up as it was last year when we had that NVIDIA chase, when we had that AI frenzy. I'd say it's meh at best in terms of the bullishness, but we aren't seeing the bearishness yet. So I think it's sort of a tale of both headwinds and tailwinds in the volatility landscape.
Can you see if this is cash moving into the market? I mean, is cash getting out front of a move, say, from 5.15% yield down to 4.8% yield?
It's interesting because I actually think it's a function of the fact that cash did move into the market, meaning our positioning is far more long now than it was at this point last year. Because when you think about a lot of that momentum chase up, Tom, it's folks who need to jump into the pool. And to some degree, everyone's already swimming in the pool. So that incremental chase just gets weaker and weaker, which is why I don't think we see that call skew, that bulled up sentiment really, really high. But, again, we don't see that downside pickup either. And, as we know, if tech goes, the market goes. So that's what we're watching
over the
for.
weekend, Paul, in Amy Wu Silverman's world, I was thunderstruck by the statistical lack of exuberance. I don't want to say I've never seen this before, but I think I've never seen this before.
Right, exactly. I know. So, Amy, we kind of started, first of all, the November, December last year to write home about. I'm not really sure what drove that, but we started the year I kind of thought, the market was soft the first, week or so of the year. I said, okay, we're going to give back some of the gains we had at the end of the year, but it's kind of solidified here. How do you feel about this market here? Can it work higher? What are the signs that you're looking at?
Yeah, so we are watching these signs really closely. One of the things that we will be watching for is if we continue to see a shift in option dynamics. So we kind of call this spot up, vol up, but essentially what we mean is as the market moves higher, is volatility moving higher or is it moving lower? Historically, it's supposed to move lower. Volatility is supposed to go the opposite way, right? But we actually occasionally see volatility go up because people are actually buying calls along the way. If that starts to strengthen, if that starts to cycle, that means we have another leg up. That's what we saw during the NVIDIA rally, but it's much weaker this time, as I was saying. So, I don't know how much steam is left in this, but that's definitely the signpost to watch.
Do you expect tech to be the leader in 24 as it was in 23? I'm not sure if it's a Magnificent Seven or NVIDIA, but do you expect tech, broadly defined, to continue to be a market leader?
This is obviously a tough question, but I think it comes down to what happens with rates, as with everything, unfortunately.
Yep.
And, right now it comes down to this debate that we have between those March and June tenors. I can tell you the way the options market is pricing right now is there is like a noticeable tick up on the index level. So when you talk about VIX and S&P, that would tell me that folks aren't nearly as bulled up in general as they were last year.
Right.
And occasionally, that can be wrong, but it tends to be a good indicator of just the fears in the market. And we do see that tick up.
So, Amy, I mean, Tom keeps us on our toes here in looking at the VIX, looking at volatility here. And again, a VIX at 12.5. I'm not sure what that tells me here.
It's really tough, and it's given us derivatives folks a little bit of existential dread, because a lot of this has to do with the rise of zero-day to expiry trading. I do think there are these structural concerns right now where you can't really just use VIX alone anymore because it's giving you a 30-day weighted outlook of implied volatility, but half the trading is done on options that expire within one day. To some degree, our toolbox has to move to get in line with how the market's been moving.
What do you say to fear of missing out? I mean, mathematically, how do you describe fear of missing out other than, OMG, it's 2 p.m., Europe's going to rock tomorrow morning, I got to get on board at the margin?
For the folks with FOMO, I think the fact that, they've discovered options is a good thing. I'll give you one kind of interesting counterexample. Everyone's really bearish on China, but I can tell you in the options market, sentiment has been going the other way. And I actually think that's a function of those who say, China still appears a bit uninvestable for maybe political reasons or structural reasons, but I still got that FOMO. So I have some FXI calls on, or I have some KWEB calls on. I think that's what's happening in the options market. These contrarian moves you see are the folks who have the FOMO, but obviously have a more top-down approach too. And you get those counter indicators in our market.
Amy, one final question here. We're juggling here as we try to open the market. It's up, and we've talked about cash, and we've talked about the rest of it as well. Are the Magnificent Seven institutionally underowned? Bloomberg has a lot of data on this, and frankly, when I look at it, can I actually believe Apple's underowned?
It's tough because the data that we have seen in terms of fund flows is that a lot has poured into it. That's not a case that it couldn't continue to go higher. AI is one of those themes where you could argue it's a secular theme that kind of crosses over everything. Yeah. I do think for a lot of folks, though, it comes down to what happens with growth. And if we don't get it, then, where do people go back in terms of flight to safety? They go back to these very high quality, great cash flow, high net income type companies with good balance sheets. And I do think you have this kind of US exceptionalism that has been the narrative for a long time. And it still seems like folks keep going back to it, even though, the emerging markets and other parts look incredibly inexpensive.
Amy Wu Silverman, thank you for waiting for the Speaker of the House, former Speaker of the House. She's more important than Kevin McCarthy.
Sure.
Amy Wu Silverman with us with RBC Capital Marketing. Going far away, there was a point where our stars each had a certain character. It was not manufactured by a marketing combine. I don't think he ever had Taylor Swift screaming at him, up in Washington Stadium. Joining us now, a piece of meat out of New Jersey that did better than good at Notre Dame and went on to a storied career in American sport. Joseph Theismann joins us. His book, How to Be a Champion Every Day. Just read it for Ronnie Lott. I'll leave it at there. It's a great, great book. Joe Theismann, welcome to Bloomberg Surveillance.
Thanks, Tom. I've never been referred to as a piece of meat from New Jersey.
Come on. No, but this is it.
I got to tell you, here on Bloomberg, you never know what you're going to hear, and sometimes you hear it for the first time.
Yeah, but what's great about this, Joe, is I'm supposed to give this.
That's what I am. You're right. I'm a skinny little piece of meat from New Jersey.
Woe is me. I had a terrible life in New Jersey. I somehow walked on the field at Notre Dame. Baloney. You were coveted at Notre Dame because you owned everything in southern New Jersey. When you walked on the field at Notre Dame your sophomore year, I remember when Brady walked on the field at Michigan. What was it like at the end of that sophomore season when you had to say, I'm Joe Theismann?
It's really funny. I wound up getting into the game just like Tom did. I mean, Drew got hurt. Tom wound up going in. Terry Handwriting got hurt. I wound up going in for the last 3 games. And when I finished off my sophomore year, I felt like, I'm validated. I belong. And that's been a thing for me all my life. Is when I was in high school, I was always a skinny little kid. Heck, I graduated from college 175 pounds. Never played heavier in the National Football League than 185. for 15 years of professional football. So it's always been that little guy who couldn't do it, and it's always been a motivator for me. But when I stepped out on the football field, I think you have to believe in yourself. Heck, if you don't believe in who you are, who's going to believe in you?
For those of you on
that's the bottom line.
Yeah, I mean, you on CarPlay, you don't see this on radio. On YouTube, you can tell Joe Theismann, there's none of this Ozempic garbage.
No.
He's just cut and chiseled.
Yep,
I mean, he's 59 years old, and he's cut and chiseled. Paul.
Hey, Joe, yeah, Tom has no respect for us New Jersey people. I'm from Trenton, and he's all over me all the time. But South River High School, that's near East Brunswick, New Jersey, for the folks listening, a great part of the state. Hey, Joe, talk to us about, before we get to like the pros and the Super Bowl and stuff, in college, it's not the same college game when you were at Notre Dame. There's all this name, image, likeness. The kids are making money these days. How do you think that's, and there's a transfer portal and everything. It's a completely different game than when you were at Notre Dame. It's
professional football.
Yep.
On a minor scale. I mean, they opened Pandora's box with this thing and made an absolute mess of college football. Now, the athletes are being paid. Some of them are being paid a lot of money, and they wind up sitting. What I think it's really doing, it's destroying the infrastructure of competition. You go someplace and you compete for a job. Well, not in college anymore. You go someplace, you don't like it, you think you're really good, you're just going to go someplace else. Before this, though, parents used to dictate to colleges whether their son and or daughter was going to go there based upon who else they would sign.
Yep.
Now it's a question of dollars. Now the universities are writing checks, and it's really destroyed what we believe college football was. Hey, I'm all for progress. I understand this. I'm not a dinosaur that sits there and says, well, it should be this way, it should be that way. I'm willing to accept whatever's out there. But what they're doing right now is basically destroyed college football. How would you like to be a coach today trying to recruit somebody?
I can't imagine. I don't know how they do it.
I can't either.
Yeah. I don't know how you recruit a kid, you coach him up, and then he or she leaves. Not that they don't have the prerogative to leave, but boy, that makes it difficult. All right, Joe, so let's get to the big boys, the professionals here. We got 4 solid teams here getting ready to try to get to this Super Bowl here. I tell you what, it's a quarterback-driven league, as you well know better than anybody. We got some good quarterbacks here.
Oh, yeah, and all 4 of them have a story. But I'm going to start with my favorite in this particular competition, the Detroit Lions.
Yeah, baby.
I just made somebody smile there. I know that.
Yes. Hey, Joe.
What they've been able to do, I mean, you're not talking about a football team in Detroit. You're talking about a city. You're talking about a group of people that have been so frustrated for so long, fans. Yeah. Now all of a sudden they get to celebrate. The difference is they're not going to be at home. They're going to be on the road. Then you got Brock Purdy. You got 3 number 1 picks, and then you got Brock. You got Mr. Irrelevant and all the number 1s. And yet he's playing at a higher level than all of them when you look at statistics. And so he's exciting. And then to me, Patrick is just phenomenal, and Lamar, they're going to have a heck of a shootout.
This is great. We interrupt this program to bring in Michael Barr of Bloomberg Business of Sports with a nodding acquaintance with Honolulu Blue. Mr. Barr and Mr. Theismann.
See, with Tom and Paul and Lisa, they have class, but you know me. I'm like that dog that's happy to see you when you get in. What it is, man. How are you?
Good, Michael. It's great. I'll tell you, it's exciting. I mean, we used to. I never lost to the Detroit Lions. Just so you know, when we played all the years, we just had this run, and Detroit would get so close. And I was fortunate enough to go into the College Football Hall of Fame with Barry Sanders, whom I respect tremendously. Right. It's great that statue is there to honor him and what his accomplishments were. But I think he just got frustrated and tired. I mean, sooner or later, you just get tired of losing. We're facing it now here in Washington. Our fans are frustrated as can be.
Well, now you got a real owner, so hopefully things are on the up move there. Hey, Joe, Chiefs, Ravens. I mean, Lamar Jackson, Patrick Mahomes. Does it get any better than that? Who would you pick between those two?
Well, Baltimore's favored by 3, which basically means if the home team is favored by 3, it's a pick 'em.
Yep.
And so they give the home team 3 points if it's that close, and it is that close. Patrick to me is one of the most entertaining quarterback in football. And 6 consecutive AFC championship games with Andy. That's all you need to know. And you can't talk about Patrick Mahomes unless you talk about Andy Reid in the same breath, to be honest with you. And Lamar Jackson, see, Lamar has a unique throwing style. Lamar is a unique athlete, and now he's developed into one heck of a quarterback. And because of the uniqueness of his throwing style, everybody doesn't look at him as a classic quarterback. He is. And he's a darn good one, and he's going to be the MVP of the league, by the way, too.
Michael Bart, jump in here. One more question.
Well, let me ask one more question. Yeah. This I am being serious about. This whole past season, there have been, let's just call it, a lot of blown calls by the referees. What in the world can we do about this to fix it?
I think one thing we can do, and Bill Belichick has pounded the table on this forever, we should be able, as coaches, if you're a coach, you still only have 2 challenges, but you can challenge every play. Right now, there's a menu of things you can and cannot challenge. Right. I think they ought to throw the menu out, start over, and do exactly what you need to do. Allow the opportunity to correct the egregious errors that we've seen. And they've been obvious. It's like guys getting tackled going down the field, no flag. Guys jumping off sides, no flag. But I really think that if you allowed, I don't want to give the coaches any more. I'm not going to slow the game down. I'm not going to stop the game. But I am going to give them the opportunity to challenge plays when and if they want to, any play that's out there. I think that's a great place to start.
Yeah, Joe Theismann, this is for all of the parents that listen to us. They're worried about economics, finance, and investment, but they got kids at home. How to be a champion every day. Tell the parents listening, tell them what they do in the jockocracy of America and every sport where kids are playing 24/7 and they're not going to make the big time of Notre Dame and the Washington Redskins. Speak on the jockocracy that we have in America.
I think, first of all, athletics is such an essential part of the growth of young people. I wrote the book basically based on the fact that the world of sports, the world of business, and our own lives all parallel one another. I know the foundation of what I became as a person started with my Pop Warner football coaches, to be able to understand how to rely on somebody else. There's obviously the nutritional part of it, because you have to watch your weight or you have to take care of yourself. Then there's the mental side of it, because you have to learn the plays. Then you have to rely on that person next to you. That's called teamwork. You set out for a goal. That's goals that you want to accomplish. The coaches will teach them the right kind of attitude to be able to care about one another and also care about the opponent. And we've made great strides in youth athletics as far as protection goes. I see one state in particular is trying to outlaw tackle football. To me, you learn so much about life, being part of that team, being part of that group, understanding how to deal with defeat as well as victory. I mean, there's so many different elements of youth athletics that is so important. And sure, we have concerns about young people getting hurt. And I recommend this to those that are involved in soccer and or football, the two that sports, and really I think softball is another one that people don't talk about, is every young person should get a baseline. When you start playing football and they start playing tackle football, do a baseline to make sure that there isn't some type of a susceptibility to injury, to head injuries. So at least give them a foundation to work from. If something does happen, you go look at it.
Hey, Joe, before we let you go, we're all getting geared up for this big playoff weekend, but it's also the time of year where coaches are flying around all over the place. And this year, boy, Bill Belichick, where would the all-time great coach, where do you think he's going to end up?
I don't know anything. People will say I do, but I don't. I think Arthur Blank wants him in Atlanta. I think Bill's going to look at this football team and say, what do I have? I think it's a pretty good defense. Good. It's got the biggest wide receiving core in football. All those guys are gigantic. And now can the quarterback play? Because that's what he didn't have in New England. Right. Bill would still be in New England if his quarterback had a chance to play decent football. Poor Mac Jones. Mac looked scared.
Yep.
I mean, he literally looked scared half the time. But if I'm guessing, to me, I think Bill's going to go to Atlanta. Pure guess.
Joe Theismann, we've got 30 seconds left. Obviously, your Super Bowl pick, please, sir.
I like San Francisco and the Ravens to be in the Super Bowl. Okay. And I think Lamar Jackson is an MVP, and I think he'll carry the Baltimore Ravens to a championship.
He didn't say the Lions. Next time, Rich, shorten this down. Just truncate this down.
You know what? The Lions were at home. I might think differently.
Good. Joe Theismann, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.